Good morning, everyone, and thank you for joining us on Morning Markets. Today, being the 1st of June, I just wanted to reflect back on what had happened over the month of May, particularly in equity markets, because we've discussed a lot about volatility or the fluctuations that we've been seeing in asset prices through the month. And certainly the themes that we've been discussing have remained very constant through the month of May, that of inflation, the inflation pressures that we're seeing in many countries, and also the reaction from central banks in terms of increasing interest rates. I think during the month of May, maybe slightly we saw a change in the focus, those two factors being very important, but also increasing concern at times about the direction of economic growth and economic momentum, and that's certainly coming into the discussions that we're having. Looking just at broad asset markets, I think global equities have ended the month marginally lower, and we look at the US, the S&P 500, I think managed to eke out a very small gain of about 0.01% over the month, but probably in the context of the volatility, the fluctuations in share prices we've seen, it's not a bad result at the end of the day. Continuing on that discussion on inflation, Kevin mentioned the numbers that we had seen from a number of countries in Europe yesterday. And just if we look at the headline level for the Eurozone, we saw Eurozone inflation at 8.1% for the month of May. And that's increasing from 7.4% in April. I do think it's worth thinking about it from a core perspective. So it does strip out that volatile element of food and also energy out of that. And we did see a number which is around 3.8%. So quite a wide variation between the headline and the core measure, and really just bringing to the fore the impact that rising energy costs, in particular oil and gas, are having on the inflation numbers that we're seeing. I wanted also to touch on that in terms of what we heard from a number of reports yesterday suggesting that there might be a slight change in how OPEC may be viewing the production and the quota numbers that they use for the production of global oil numbers. Now, by that I mean a move to exclude Russia from that quota. That would be viewed as a significant positive, because that would allow those countries such as Saudi Arabia, United Arab Emirates, that do have spare production capacity at this point in time, to increase production. And certainly that would be beneficial from a pricing perspective, but also going back to that original point from an inflation point of view. So we will certainly look to, there's an OPEC meeting on the 2nd of June, and we'll see if news does come from there, but certainly a point to monitor over the coming days. The other thing then, just looking to the rest of the week here in the UK, we have the bank holiday on Thursday and Friday, but in other asset markets we will have a number of data points that will be important, particularly as it relates to the US, focusing in on the monthly jobs report for May, which comes out on Friday. Interesting and important from two perspectives, really. What's happening in the labour market in terms of the unemployment rate and the participation rate, but equally important, what's happening in terms of wage inflation. Are we seeing any indication that that broader based inflationary trend that we've seen in the US, inflation at 8.3%, feeding into wage costs for companies? And we'll come back and report back on that at the beginning of next week. I'll leave it there for today. Please do enjoy the long bank holiday, and we'll see you on Monday.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.